What is going on, chat? We are going to be going over our trade recaps. It's going to be Microsoft from last week, Microsoft shorts. We're going to go over the Moderna long. We're going to go over the AVGO Lotto long, and I believe there was one other one that I wanted to really cover. It was Microsoft, QQQ, Moderna, and AVGO. So we're going to go over 4 trades. A couple of them being Microsoft and QQQ kind of setting up the tone for the week, right? Kind of sealing the deal off with a clean, strong week, along with Moderna, and then we hit the really nice AVGO Lotto on Friday. And the reason as to why is the spot we were trading at. I hate saying that. I hate being like a blue card demon these days. I'm not a big fan of that. I have quit doing that. I find it really, really cringe. So I'm going to go over the trades, and we're going to talk about Microsoft first, right? So I want to talk about the range that we were within, right? We got the distributive type of sequence in the earnings area where we got the reaction from earnings. We obviously gapped down ever so slightly. And I think we made a push higher, and then we obviously just ripped down, capitulated all day. I believe, right? I'm not exactly too sure. Okay, so what actually happened, guys, was we got this like massive, just crazy pop, right? And what it was really doing to was kind of just drawing to this previous high, and then it was a failure over that 415. And then obviously from there, we kind of had a bearish looking tape for the rest of the day. Now, what I want to talk about was the confines that were created afterwards and how that is little to no progression, right? This is a high created. This was your previous high, right? So whenever you take your little tool and you go, oh, yeah, we made a new day's high on earnings of $2.27 for the new high. And then you flip this and you say 9 days later, we made a higher high by $5.50. And that's right into an earnings report. And there's a lot of internal range liquidity sitting and building within here. What do we have left behind? Well, guys, I've been talking about how we do have the distributive sequences on the table right now. And what do we have behind? We have a leftover gap behind on the earnings gap down. This was whenever we were rewashing via dark pool within the S&P and QQQ. And then we obviously mitigate our way higher, carry out our higher lows, really low dried up volume, and pretty much all of the tapes together were just overall dry. I saw a big seller within Google at the time. I thought it was distributing. It was distributing. What were they waiting for? CPI. What was passive doing? Playing passively. Or what am I saying? What was supply doing? Playing passively, incrementally, setting their ask at higher highs in spots that they're being very selective with to obviously get into that CPI report. What do we get? The gap down. What do we get? A mid-candle bid and a slight recovery. What do we get after? A 3x inside bar, low volume, no bullish spread. What does that mean? Considering the fact that we gapped down and never made a recovery back into the gap, we probably have to draw lower because what do we have below us? Imbalance, gap. Okay, like it's that simple, guys. We have confines of range here. Earnings candle low, earnings candle high, false breakout, gap down, no bid in the mid candle, below equilibrium, 618. What do we have to do? Fall further. Whoop. Oh, okay. Wow, NVIDIA report. Push higher, earnings candle, rejection, come back down into that, kind of fill this gap, start getting a low volume bid. I'm talking about the daily sequence when I talk about my trade plans. This is just the daily sequence of things, guys, right? We obviously had this gap. We dug into this gap. Obviously, sellers took it back into probably what we would call at least equilibrium, probably towards that GP, and then we finally started getting that buyer. We started getting these reversal looks. Really low volume, though. Really, really, really low volume. And then we get into our Thursday event, right? That was rebalancing. That explains the volume. And then from there, guys, what do we get? Now, whenever I talk about a day trade, what do I want to talk about first is the sequence and the intraday type of sequence that really happened on the days prior, on the prior days action, right? And this was Monday, right? So this is where I'm getting a feel for the level 2. This is where I'm really starting to understand what things are going to build like into the end of the week and in the middle of the week, right? And whenever I talk about this, guys, what I'm saying is I'm kind of just getting a feel for the tape on a Monday, and then from there, what I'm doing is I'm trying to see how this is going to, give myself some sort of vulnerable setup in terms of where I could catch this, like for a short, if it starts giving off some red flags into the close. What do we notice about the sequence, guys? We obviously gap down, right? We had this previous day high over here. We had the earnings candle level, right over here. We had a resistance over here. What is this little sequence right here kind of telling us? That a bid is stalling. They tried to catch a higher low. They did catch a higher low. And then this was purely just dry action with no follow through at these highs. This was a little micro-based range and little tiny wedge building here that was just incrementally selling the highs. And what this was really doing, guys, was this was kind of pushing back into the pre-market high. It tapped into the pre-market high. There was obviously some sort of pool of more liquidity over here, and then we started getting lower highs into the close, right? And this whole sequence here, right, guys, this is a pivotal level, right? Here's a failure of a breakout. What happens is we push down, we get the higher low, and then we obviously push our ways higher on just the ever so slightly higher highs and higher lows. And what this is really doing is showing off that there's going to be a failure of this very big time pivotal spot on the daily chart itself, right? And then we obviously got the daily candle closure beneath. Now, I didn't overnight this, but it was a short focus going into the next day. I posted the chart from the Discord. I posted everything. This was the only focus was a Microsoft short setup. And then the next following day, guys, what do we get? We obviously get a pre-market pop right into the open, and then from there, capitulation off the bat. I took this at like 9:33, so I caught a fill like somewhere down here. I took next week expiration on this Tuesday, and I took some weeklies. I kind of paper-handed the weeklies, but this was just honestly holding for what would be a target down into here. This was my initial target was, okay, we started failing. We probably are going to need to first push into 408.50. Second push is probably going to have to be in 402 or 405, right? I was looking at 405 to 404, and then my flex target going down into that 402 spot. Very beautiful trade in regards to where we were on the chart, right? We obviously had this level up here. And sorry, I had something going on the other part of my computer. So we had this little range here, guys. Like I said, 410, 408 was the very first target, and I was looking for a signal to see if there was anything super aggressive off of that spot in terms of a buyer. Obviously, we just got the candle closure straight beneath, and ideally, guys, what I was ultimately looking for was this imbalance down here, right? The 402 gap level. Okay, because if we have no bid catching a higher low up here, it's probably going to make a lower low from this low and fill the entirety of this gap and this imbalance, right? And the fact that we never had a true bid leading us through here, and that this volume was rebalancing, and then ever since then we had a dry bid up here. Nobody could really claim that 415 cleanly. From a higher time frame perspective, so it was a short, right? I mean, this is a distributive range, guys. We have heavy volume sell, lower volume grind up, heavy volume gap down, heavier volume gap down. Really, no true bid within the market. Heavier volume gap up. That was from the NVIDIA report, and then from there, just simple resistance again, and the same seller incrementally rewashing this at these upper confines, right? It's a very simple trade. Now I'm going to go over the AVGO trade because that trade is kind of nutty. And I want to talk about this, guys, because this is in very pivotal spots from a daily chart perspective. And it's funny enough, we actually printed this type of daily candle today. But whenever we were in the Friday action, what I want to talk about is we were bleeding. This is a very hot name. It's a very hot sector. And whenever the premiums get so decayed from the call side, and as you're leading into the close of that week, and you're looking at like a very bearish close with really no true lower high put in for the day, for the intraday structure, then that rings off a red flag, especially given the fact that we're in a bull gap. This is the bull gap right here, guys. This little spot right over here. This is your bull gap. And what do we notice about the bull gap? And what do we notice about the lows of the bull gap? Well, what do we first notice? Can anybody pause the video and tell me what we first notice? Well, we have a couple levels in store here, guys. We have obviously the breakdown level from this internal range low, right? And this was all kind of just internal range liquidity building beneath this candle's high, and lower highs to come, right? We obviously got the earnings report. It was a double beat, but it looked like it wanted to sell. That's exactly what I was expecting. I even said it in the Discord. And then from there, what happens is we got the breakdown beneath this breakdown range between these internal lows, 1372, 1347, those general ranges, right? And then from there, what happens is we retest, we fail. And then our first accumulative candle and our first sell climax signal is coming off of this spot right here, right? We obviously get some sort of heavy volume hammer, right? And then the follow through and the continuous breakdown in lower highs to come after that. And trend was on lower and declining volume that was kind of just eating itself away. And we had a larger absorption of supply at this spot, right? I think that they got a little bit aggressive in terms of pressing their ask. And then what happens is you get a buyer that's going to start incrementally bidding this at new lower lows or over time, right? And he's going to chip away to the point where a seller's going to get so exhausted that he can't press down here at these new lows, and he's going to release the tension, and it's going to obviously trade back into imbalances and break down candles, right? And another thing that I didn't like about the short side type of look for AVGO was this level never truly got retested, right? We simply just tried a very weak attempt of establishing a support off of this wick, and then the 5-minute inside bar following that. And then what happened, guys, was we kind of just gave it up. It was never a true retest, right? And the fact that I've really liked this trade was that this was some sort of bear flag breakdown, right? We had a little bear flag right over here. I'm not a big bear flag guy, but there's your little bear flag. We break down, but this little candle right here tells you that a bid was probably trying to rebid this or had a plan to. And then obviously he found out that there's a bull gap. Obviously the lower ranges of the after hours earnings report. And just overall, guys, this is just not the best spot to really be placing a bid whenever you have imbalances down here where bigger money has previously rebid this thing at, which is the bull gap, right? So whenever you look at this from a bull gap perspective, guys, what is this, right? This is simply put just accumulation within the bull gap. As soon as we entered it, keep in mind that this is also a major support resistance flip. And then from there, what do? Was we just simply continuously started accumulating beneath this SR flip, which is trapping a lot of retail. And really all it's doing is pushing into this imbalance. They're incrementally bidding each and every lower low. And then what do we get at this bottom? Is a dragonfly doji with a lot of volume behind it. 2 reversal bars, like subsequently, and then obviously you get your very healthier spread 5-minute candle pop, and then obviously structure development with a bid moving higher for the higher low, and just a beautiful trade overall. And we had a very vulnerable spot to really start thinking about taking a position on beaten up call premium down here at 1 o'clock on a 0 DTE, right? I know that's a little bit degen, right? But when you're looking at a 1.0 on an AVGO premium and you're figuring that this breakdown level was never retested, this bear flag breakdown was never retested, what could we do? We could probably draw higher in terms of looking for, more of a heavier pool of liquidity where there's going to be more of a seller to propel price back down for our first lower high, our second lower high of the day, right? We only had one lower high, and it was after this capitulation bar, which makes total sense. But ever since then, guys, we got that sell climax look into the bull gap. Premium was very decayed. We slapped calls down here. We held it through the higher low. We held it up into this level. That was our target. Very beautiful trade. I'm going to go over QQQ now. I want to talk about QQQ and kind of how the chart really aligned itself. Actually, no, let's just go over Microsoft on Friday. Okay, guys, so that same spot that I talked about, guys, on Microsoft. Bearish progression, or bullish progression, right? This little spot right over here, and we had a previous day high, right? So whenever you're talking about the gap open, right, this is also kind of like that CPI gap, and then you could take it from the previous day high. What are they going to probably do? And what is another spot in which this is an imbalance created where they're going to probably resell this? It's going to be above a previous high, where there's going to be a new seller coming into play. Take swing high, swing low. There's your GP, 410 psych. Beautiful spot for Confluence. Let's look for a reshort opportunity. This is where we took the reshort at, and then we kind of just carried through for the rest of the day with a really nice short that kind of just led us back into, I think I was scaling even down into here, and then I took my runners down into the end of the day, towards the end of the day. And we were kind of just testing into this spot of previous reaccumulation, or this like support resistance flip. So yeah, I mean, this is the range in which we're looking at tomorrow now, guys. I mean, we got Friday's low, we got the support, or this resistance turning a support now. It's going to be a very interesting chart to really be watching for tomorrow and into the end of the week. This is probably the range I'm going to be watching moving forward, but yeah, those are the Microsoft trades for Thursday and Friday, guys. That's the I'm getting real tired, so I'm gonna have to unfortunately end this recap soon. All this is really doing, guys, is being patient, looking at your system and looking at where the best possible fill is at the spot that makes the most sense in terms of where we're at on the daily chart. That's just something that I've always traded by, is where we're at and where the meaningful buyer/seller would really come into play at, and where the intention truly is. Guys, do you think that the intention, do you think that blindly trying to front run this in this bull gap is necessarily such a great trade? Or are you looking at more of the distributive sequence we're seeing and trying to see the failure off of 415 for a potential short? And obviously taking the opportunity to long at lows. Like I said, this is right after an earnings report, a very bearish candle right over here, guys. So it's not necessarily something I love. We have to recap Moderna real quick. Oh, my fault. Okay, so Moderna I really liked. This is the one that I was talking about literally Monday of last week, right? So we sized in Tuesday, okay, and then we got the follow through Wednesday and into Thursday. Thursday's where I scaled my March 15s. I took this at the end of the day on Wednesday, I believe. It might have been Thursday. I can't remember for the Discord people. But guys, what this really was, guys, was it was kind of just simply put, just wider perspective of reaccumulation in our first higher low off of this this bottom down here. And what I really liked about this, guys, was, first of all, whenever you look at this from a weekly perspective and you see it into that discounted range, and then what you see off of it is a PEG where they smashed on revenue with 12%, and then just very cooked volume. And literally, how many inside bars is this, guys? This is 14 days of trading within the earnings candle range. Considering the fact that you're getting these heavy volume pops in Pfizer, Moderna, they smashed revenue, and there's really no true seller and it's building a ton of internal range liquidity. And what it's doing is it's creating a path of least resistance off this previous pivot spot, right? So whenever you're looking at this and you're saying, oh, well, where could the resistance be? And where's the leftover sellers at? Where's the leftover resistance at? Notice, guys, how whenever you kind of lose a support, that support now turns a resistance. I mean, you could give yourself a little bit of a relatively wider range, guys, but when you're looking at this and you're saying, we're building a lot of dry volume, low volume, tight spread candles, no alarming volume, internal range liquidity off of this 13% move on the underlying for the day, meaning big move, big volume, big intention, and then afterwards a very dry auction with no true seller. And what we're doing is we're also, simply put, just in a higher sequence of digesting the previous move. Very, very, very strong, healthy move higher with consolidation, with heavy volume gap ups, with low volume subsequent sequences for sell side, with building a path over here, with eliminating supply off this candle and then expanding our way through, coming back down, filling some of the imbalances created from the previous push higher, maybe shaking out some people in this little sequence down here, recovering, earnings candle pop, heaviest volume bar in however many days. How many days is that? Heaviest volume bar, guys, ever since this one, which is another very wide bull spread candle. This is a highest volume bar in 51 days, right? And then we're kind of also really just building that whole excessive internal liquidity off of this previous swing low at 95, the 95 psych. And what this was doing was kind of just building out a campaign, eliminating any seller in between. And then obviously as you get that expansion, this thing just moves like butter. So we sized in on Wednesday with the March 15s, and then we just kind of had the follow through above 97, 96, 95. We never really had a true reason to cut. This was a really nice recovery into the close, and then we got expansion the next following day into the Friday. This is where I started cutting the runners on that position for like 400%, something ridiculous. And then from there, come Monday, that's our major expansion candle. So those are the trades. This is why I don't always like trading indices, because there's a lot of opportunity outside of the indices, right? So this is just a very beautiful rotation where you're looking at a very bottom stock, where you're looking at distributive sequences within tech stocks. You're also looking at March OPEX, you're looking at CPI this week. There could be a sneaky little rotation into these undervalued names, or at least just like laggers for the time being that are getting that pop, that really nice move off of lows, and then the heavy volume pops internally from those lows, and then kind of no true seller in between. With also a shooting star coming in a very, very big red flag, kind of alarming in AMD and NVIDIA, things like that, right? So this is just, simply put, something that is a little bit more of a quiet trade, but a very clean trade, very stress-free. Pfizer, we took Pfizer today, and that was also the same shit, guys. I mean, whenever you're looking at this and you see a very heavy volume pop, you see Moderna with the follow through early, and then you see Pfizer kind of dealing with the same shit over here. What it's doing, guys, is this is another example of price covered over time, and kind of how sellers would really just start laying off the gas down here on such a beaten down stock. And look at where this is really trading to, guys. Look at these levels, right? This is very easy money. Okay, so that's levels all the way back in that's the COVID low. This is the same shit as Disney, right? Like, come on. We're getting the heavy volume gap up, and then the subsequent Thursday action on super low volume. And then what do we get? An inside bar, matching volume. That's a very favorable long side trade. So I waited until the new week. I sized in immediately at open, considering we were kind of opening up above these previous all these days highs. And there we are, right? What are we looking to retest? 2830-ish, kind of like this little gap up here, which is what we scaled. That's why we scaled most at close. I scaled like 4/5 at close. So yeah, those are the trades. That's today's trade. That was kind of like mid to end of weeks trades. I don't know what I took earlier in the week last week. But yeah,